All right. So tonight I am going to cover a few things. I told you guys last week that um, if I felt like time would permit and I had everything together for you guys, I would do stocks tonight, cover that for a little bit, and then also go over the economic calendar, the world calendar, and also just kind of go over some things that are going on that I want you guys to be aware of, in addition to just the Forex Factory calendar. So, with that being said, we'll go ahead and get started with the Forex Factory calendar first. So, today is a holiday. So, what you would have noticed today looking at your MT4 or MT5 is that the futures markets were open. So, um, if you trade U30, SPX, NAS, you would have seen those things moving because the futures market is open. However, the actual stock market isn't open. So, what does that even mean? So, when you're looking at the futures market, is it's a predictor of market movement for that period of time. It's also a predictor of what the market conditions could possibly be like when the actual market opens. So all of the movement that you saw in U30 and the indices today for the U.S. markets kind of took into account a lot of the news that happened over the weekend, predictors of what's going to happen tomorrow whenever the market opens as well. Um, so that's one thing to also keep in mind. Another thing to keep in mind of with a bank holiday is that volatility could be a little low with that particular currency. So for the U.S. currency, you may have noticed that they moved and then they really didn't move as much as they normally would have. So if a normal candlestick is about, let's just say for instance, 10 pips, today, since it was a holiday, that candlestick might have only been 1 to 2 pips on average. So that's another thing to keep in mind. And um, you can also get random spikes or manipulation in that currency's market just because that bank isn't open. So the bankers don't have a way of counteracting any manipulation that can happen with that currency. So let's say, for instance, Japan wants to sell a lot of treasury bills or buy a lot of treasury bills, and there's nothing there to offset it in the market. Or let's just say they do it temporarily because they know the market is closed. They can capitalize off of that trading UJ. So it's just different ways that the markets can move on a bank holiday. I just want you guys to be aware of that for future holidays. We've kind of covered that a little bit before in the past, but it's always just a good reminder for you guys to have. And then what typically happens when you have a bank holiday starting the week is that now everybody is trying to catch up. So technically today would have been the day where people are coming in, they're just getting the week started, they're not placing any of the real heavy trades. But you have to remember the American banks were the only banks closed today. All the other banks have had a chance to do that already. So tomorrow is going to be the day where they're going in like jumping in the deep end. They're like truly doing full blown trading tomorrow instead of that little workup period. Also, this is a big earnings week for Walmart, CVS. We have a big congressional hearing for Robinhood this week. So a lot of traders are going to be looking forward to all of this news coming out. So take that into consideration for your trades tomorrow. There's nothing really big coming out tomorrow. There's a few um, things that are coming out this week, but not tomorrow. Wednesday, one of those things is going to be retail sales. So we're going to be looking at retail sales, trying to just really see how far the economy has grown since the last stimulus. Since we're not really looking at the holiday anymore, looking to see what true spending, what normal spending is going to be looking like. So um, that's what I'm excited for Wednesday to definitely see growth in the economy beyond a holiday spending season, because the holiday spending season actually wasn't all that bad. Um, this past season compared to others, it was down a little bit, but it wasn't horrible. People actually spent money. Now we're looking to see, um, how well these stores are doing, how much money people are spending. This is really going to set the precedence for the rest of this quarter and then also going into next quarter. Just really looking to see um, what the next stimulus package could look like. Because if these retail sales numbers aren't good, you can, I would bet money that the next stimulus package that they're planning for in the fall will include money to help these retail stores kind of stay afloat. Some type of corporate bailout package for them if retail sales aren't good. And also on Wednesday, we get FOMC minutes. So this is going to be like the monthly minutes. Um, these will be coming out monthly. We typically get them monthly with like a big meeting or a big speech every other month to every third month or so. So we'll be looking forward to reading those. And then also just trying to figure out what's going on with Australia and their employment situation. So that'll be like their version of NFP. On Thursday, unemployment claims, Philly Fed manufacturing, which is really important to get the manufacturing data, how well the factories are doing in the Northeast. The Northeast of the United States is very heavy when it comes to factories. Steel, aluminum, um, lumber. There are quite a few different um, sectors of factories that they have in the Northeast, but they're all super important in helping to drive the economy of the United States because there are certain areas and certain divisions and types of factories that they can only have there just because of mining and all of those types of things that they do. So that's why it's important to look at Philly Fed, because it's like, okay, if those factories are doing bad, then you can expect different areas of the United States economy to look bad. And it's almost like a domino effect. Unemployment claims, we get those weekly. We're definitely looking for unemployment claims to drop. We don't want unemployment claims to keep going up because of the fact that now we're on the side of COVID where they're hoping that we can start reopening the economy. A lot of the casinos, Disney announced last week that they're going to reopen in California at a 25% capacity. Vegas is going to be opening at about a 30 to 35% capacity. So a lot of these places are trying to reopen. So hopefully those people who were out of a job in those areas can now go back. And the hope is that they do go back. That's going to be one of the big issues that comes up with this reopening is that while there are people out there who really want to work, there are people on the other side of that who have been out of work, have enjoyed being out of work, they're collecting unemployment, and they don't really see the benefit of going back to a job, especially those people who have found different avenues of making money and have kind of diversified and found other streams of income and have said, well, I don't really see the need to go back to a 9 to 5. So if we start reopening and unemployment claims go up, it's an issue. We start to reopen and unemployment claims stay the same, that's an issue. Um, we open and unemployment claims drop, that would be good, but we also need to figure out if that's because people are actually going back to work, people have just, run out of time, exhausted their benefits. So we'll just need to, analyze that situation if once everything reopens, unemployment claims drop. Crude oil inventories. Oil is something I'm going to talk about once I get through with the forex factory calendar. But just know that, I told you guys last week we were going to start looking at oil. And then Friday, we get a lot of services and manufacturing news from the EU. We also get services and manufacturing news from the GDP. and core retail sales from Canada, and retail sales from the GBP. So Friday, if you trade on Fridays, one way to play this is that um, we will be getting this U.S. news for retail sales on Wednesday. So then, whenever the news comes out, if you're a London trader, you can trade that news during London session based off of the comparison of the U.S. numbers to the GBP numbers. Then you can also play out the same thing for USD CAD at 8:30. One thing I just want to caution everybody on for Friday is that if you are a US 30 NAS SPX trader, just know options close on Friday. So people are going to be trying to take profit on Thursday. Hopefully they take profit on Thursday and don't wait till expiration. But options expire on Friday nonetheless. So keep that in mind um, for those who trade indices. So now to kind of go back through, I'm going to cover some news that's not on here. I did mention earnings. So Walmart, CVS are the big two. There are probably a couple others, but those are the main two I'll be looking at for this week as far as earnings are concerned. Also Thursday, Robinhood is going to be testifying and they have their congressional hearing. So that's going to be really important if you are a retail stock trader, which is everybody on this call, because what Robinhood did and has done since the whole GameStop and all the other stocks that were being looked at on Reddit, when there was the um, institutional manipulation on their behalf, when they stopped trading, when they limited trading, when they ran into liquidity issues, they couldn't pay out profits and they weren't allowing people to close out. And then when they were allowing people to close out, it was taking up to 2 hours to close out trades. So people were losing profits as the market was moving. To an extent, every broker, no matter if it's stock, forex, whatever platform, they can claim market conditions as a reason for why they're not able to close out your trade. In forex, they call it slippage. You'll hear slippage. There are some brokers you'll hear it from a lot. Other brokers, you won't hear it from them quite as often, but it happens. And one thing to remember to avoid slippage in any platform, stock or forex, is when you're in profit, trail your trail price with a stop loss, a trailing stop, put your TP wherever you want to take profit, but don't get too greedy, because what ends up happening is the market could be, I'll go to GameStop as an example. GameStop was like at $50. GameStop went from being like $50 to like, I'll just give an example of like 175. Um, those people who were in at 50, great. They're seeing all of this profit. People are still seeing the market go up and they're getting in along the way. But for those people who got in at $100, they're not taking or seeing as much profit. But when it gets to 175, everybody's in profit. Everybody's in profit at that point in time. So there's no reason why you shouldn't have, or a trader shouldn't have closed out their position or um, took partial profit. That's the benefit of having Robinhood, not promoting any um, platforms, but I'm just saying that is a benefit. You can take partial profit. You can close out part of a share or a flat dollar amount as opposed to having to sell whole shares. Um, but as price continues to move up, 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 everybody's getting in. You get the bandwagons, you get those who are FOMOing. And when price hit like $475 to get to the top, there was only $8 more left. So if you got in still thinking like if you were in a Reddit group and you said, oh, they're talking about GameStop going to $1,000 and you see it's only $475, you're like, oh, I'm gonna go ahead and get in, not knowing that it was only going to go up $8 more, and now GameStop is like back down into like the 50s or something like that. So that's one thing that's going to be talked about, that whole big market movement. And I'm bringing up GameStop. I'm talking about GameStop a lot because that's going to be the main stock that they talk about because it was manipulated so heavily. The 52-week low for GameStop was $2.67. The 52-week high is $483. And right now it's sitting at like about 50 or so. That's a lot of manipulation in a stock price. Like this stock's price went up over 1,600% in a month. This was not based on fundamentals. It was based on a group of retail traders who got together and wanted to see this stock move because they felt that the shorts on the other side were taking advantage of the situation that GameStop is in, and then also the economy. So during this congressional hearing, you're going to hear a lot. And I say you're going to hear a lot because I'm expecting all of you to listen to it or read notes from the actual speeches. I don't want you reading a news article that's going to sum it up for you because all news outlets have a bias. All news outlets have a bias because they're owned by someone who has a political view and they want their political view expressed through that platform. So MSNBC, CNBC, Fox Business, Bloomberg, all of those news outlets have a political bias. Go straight to C-SPAN and watch it. It's going to be on C-SPAN 1 or 2. You're going to be able to watch the whole thing. No commercial breaks, no nothing. Go straight to Congress's website. You're going to be able to read and watch it like live, see it for yourself, read the actual transcript for yourself. Don't depend on a third party because you're always going to miss something if you do that. It's going to affect you if you trade stocks, if you want to trade stocks, if you become interested in trading stocks after I go through, the presentation talking about stocks, like it's going to affect you. What are some of the outcomes that can come out of this? Well, they can shut down Robinhood and tell Robinhood they can no longer do business because they participated in severe market manipulation because they limited the retail traders' ability to trade. They could limit retail traders' ability to trade because Robinhood is going to try to make the argument that retail traders traded off of limited to unreliable information and that they were trading off of a group and off of a group herd mentality. The third option or the third outcome of this could possibly be that Reddit gets shut down temporarily because Reddit gets used for other things other than stocks. It gets used for the random everyday questions, but particularly that group could be permanently shut down and Reddit could have some type of fine, ban put on them because their platform is what actually allowed for the manipulation to take place. It's where it started. It's the group that kind of started the whole thing. The founder of the group is no longer a part of the group anymore. He got kicked out, so there's not going to be any action against him. The other option that could come out of this, and it's already been talked about, Janet Yellen has already talked about it, and this is why I told you guys I wanted you to research her because she's talking about putting a transaction tax on retail traders' trades. So that means that if you go into Robinhood and you were to place a trade, in order for you to buy stock, whether it's a whole share, part of a share, you'd have to pay a transaction tax. Then whenever you close out your trade, you'd have to pay another transaction tax. This is not transaction fees. That's completely separate. Robinhood is charging the transaction fee. They can charge you the 99 cents or whatever it costs them to transact your, buying or selling your shares. The actual tax itself is going to the government. So it's going to be completely separate. Janet Yellen is very heavy on taxes, which kind of leads me into my next topic, and I'm just going to roll straight into oil. The high temperature, other than Miami, because in southern Florida, It's always in the 80s. Other than the southern half of Florida, the high temperature in the United States today, the high for the whole United States was 56 degrees. The lowest temperature was like -30. And um, Texas saw snow in like Houston, Dallas, Fort Worth for like the first time in like 10 years or so. They don't see snow down there. People are freaking out. They have inches of snow on the ground because they don't typically get snow. They don't have the equipment to scrape snow. Um, and they're dealing with rolling blackouts right now. I have several friends in Houston. Some of them I've been able to get in contact with, some of them I haven't. And I'm kind of nervous for the ones I haven't because I know where they live. But it's like they don't have power, and it's 15 degrees as a high. So when it's 15 degrees, that's the high. The first thing you're thinking about is food and heat. You're trying to heat your house. So I brought up that when I talked about crude oil inventories, because I'm expecting crude oil inventories to drop. Why? Because hopefully you guys will still be able to see when I click on this. Pipelines. Where are your pipelines? If you look at this map, almost actually about 40 to 60% of the oil for most of the United States comes from Texas. Probably a little bit more than 60%. I just say that because of some of the northern pipelines that we have. But yeah, the Gulf region of the United States has always been our biggest supplier of oil. And I was going to ask you guys, but I'm just going to tell you for time's sake. If you live in North Carolina or anywhere on the East Coast, this purple line that you see here is the Colonial Pipeline. It comes straight from Texas. It actually comes from like Houston, Texas. So if Houston, Texas has issues with power and they cannot continue to pump oil through this pipeline, what is going to happen? We're going to end up with a gas shortage. We're right in the middle-ish, so we won't really have a problem in North Carolina, but the further north you go on this pipeline, the more issues you're going to have with supply. So that's why it's an issue that is 15 degrees as a high in Texas right now, and that there are rolling blackouts because they're not used to it. Infrastructure is not set up for temperatures to be 15 degrees. Workers are not used to being out on these rigs, the rigs that are closer to shore, and they're also not used to just pumping in 15-degree weather. The pipes are not shored up for 15-degree weather just because it's such a warmer climate down there. They are up north, they aren't down there. So that's something to take into consideration. Oil prices today saw a huge jump because of the issues that they're having in Texas. The other thing that you'll see increasing throughout the week, and especially since there's another weather system coming through, is going to be natural gas, heating oil, oil itself, and kerosene. So those, and diesel. So those are going to be different oil and oil derivative type shares, stocks, futures. We're going to be looking at going through this whole week, especially just, knowing what's going on with the weather here in the United States. So speaking of oil, let me go back to this map because this is going to be really important too. Going back to the issue of unemployment claims. So we kind of talked about the Keystone Pipeline XL that travels from Alaska through Canada down through to the United States. But there's also another pipeline that has been discussed and that they want to close. So it is the Dakota Access Pipeline. I had to take notes for myself. So the Dakota Access Pipeline is right here. It runs from the Dakotas south and then it branches out. So if they close that, it's the actual pipeline. So if you were to drive to the Dakotas, look, it would be pipes on top of the ground, and then at some points they run underground. But for the most part, this pipeline sits on top of the ground, and it pumps oil. It's quicker, it's faster, there's less chance of injury to people and to the environment with a pipeline. If Biden gets his way and they're able to close that pipeline, what it means is that it means several things. First, it means that they're going to have to find another way to get the oil from the Dakotas south, which means that they're going to have to use rail cars. Rail cars are super dangerous when it comes to transporting oil, solely for the fact that you have a human involved. Um, you have different speeds that this engineer and conductor they're having to regulate through a pipeline, through a railway. You also have to cross roads. There's a chance that a car is not going to be paying attention. So there's just more chances for injury and for the oil to not get to where it's supposed to be with a railway. Also, for this oil to get where it needs to be via railway, there are farmers that are going to have to give up farmland in order to help make the route more direct to get to some of these transfer sites. So that means that there are going to be billions of dollars lost in income, not only for the farmer, but there's going to be $1 billion in shortages that happen with the food supply because you're now digging up farmland for a railway that could have been used for food. And also, the infrastructure for the United States isn't quite set up for us to transfer oil from the pipeline to a railway because the railway is slower. You have to take trains back and forth, or there has to be a constant stream of trains, which is costly as opposed to a pipeline. So, excuse me, whenever we're looking at all of this information, like literally, we just have to take it all into consideration and just know that okay, the economy is going to be taking a hit from this. About 79% of our energy here in the United States comes from oil, comes from coal, comes from gasoline in some way, shape, or form. So we definitely need to be paying attention to that. And they're trying to introduce a carbon tax, which is the tax component of this. And that's because Biden has a green initiative. That was something that he ran on in his platform. That green initiative is going to cost the United States about $2 trillion in order just to create the jobs. So that's going to be a little expensive. And whenever we're talking about trillions of dollars, here again, we're talking about more money. So we have a $2 trillion stimulus package. He's going to ask for $2 trillion to get jobs for these um, green, for the green jobs that he's wanting. He's going to have to ask Congress for $2 trillion. Then they're going to want for more money at the end of the year for another stimulus package. That's not even including normal day-to-day government spending. That's not including government programs. That's not including anything else other than just trying to spend money um, and trying to push forward a lot of his plan that he ran off of in his platform. The carbon tax, I know I mentioned it. I didn't really go into a whole lot of detail, but the carbon tax, what it really consists of is essentially corporations and individuals who don't meet the minimum guideline for carbon emissions are going to have to pay a tax. So they're trying to get companies to be more green, and they're also trying to get people to be more green. So it's making emissions requirements for cars more strict. So if you have an older vehicle, they're probably going to start requiring emissions testing on those vehicles. And if it doesn't pass, you're going to have to pay a tax. So like I said, this was one of the proposals that came from Yellen. Um, so she's very tax heavy. So all this stimulus money for those of you who've heard me say it before, stimulus money isn't free. It always has to be paid back by the taxpayer in some way, shape, or form. So you're either going to have to pay that money back in an increased interest rate, increased inflation, or you're going to have to pay it back in a tax. And most of the time, it's taxes. They're going to increase taxes on gas, food, carbon tax, transaction taxes. They're going to start throwing in all these little taxes, and you won't notice it on one transaction. But if you calculate all the tax you pay at the end of the year, it'll be a lot. It starts to really add up. All right, so I'm done there. Oh wait, no, I'm not. One more thing. So over the weekend, for those of you who've been with us for a while, you remember me talking about Mario Draghi. He used to be the bank chief for the European Central Bank. He is now going to be the prime minister of Italy. So um, we'll definitely start looking at more Italian news, just because we kind of know Mario Draghi's history, and we'll be looking to see how well he's going to be able to manage Italy's debt, considering that he used to be the bank chief, hopefully well, because he'll actually be able to see where the money is going that he gave to Italy, and he'll actually be able to help give it back to now Christine Lagarde. Um, so that's really going to be interesting for us to look at, see how that transition works out. Hopefully, they're able to, fingers crossed, get their debt paid off and, be a more stable country afterwards. All right, so I'm going to stop sharing my screen, and I'm just going to start now introducing you guys to um, some basics when it comes to stocks. So for those of you who have never been through one of my presentations before, I don't do full screen PowerPoint presentations because I like to control on the side. Sometimes I like to skip around. And also, this presentation has some caveats to it because this information that I'm showing to you guys tonight is stuff that I've learned over the years. It's me. I didn't go through a book to learn this information. So there are 2 slides at the very beginning of this presentation that are disclaimers. And to take one of those disclaimers into consideration, I'm going to ask Mr. Levels to stop the recording so that we can get started.